Good morning, everyone.
Hello, good morning.
Good morning.
Good morning. Good morning.
Good morning.
Good morning.
So we're starting now. I'd just like to thank everyone for taking the time out of your busy schedule to join us for today's forum. My name is Timothy Aluko, and I'm Program Manager on the Sustainable and Inclusive Digital Financial Services Initiative at Lagos Business School. I would like to particularly acknowledge our regulators who are here today, or who will be joining us shortly. We have representatives from NICTA, from CBN, NCC, PENCOM, FIRS, SMIDAN, and the Ministry of Budget and Planning. And I hope there are a few other regulators that will be joining us as well. Before I hand over to my colleague Tayo, I will just say a few words on the objective of the FSPs Regulators Forum. The aim of this forum is to establish a platform where providers within the DFS ecosystem can discuss constructively with regulators on specific regulatory levers that can result in the creation and delivery of better customer value propositions that we hope will move the financial inclusion needle. Today's forum will focus on a wide range of policy issues impacting financial inclusion in Nigeria. And we hope that today's discussion will translate into meaningful actions that will further advance financial inclusion. While the discussion is going on, please always remember to mute your mics so that it doesn't interfere with the discussion. And if you would like to make a contribution, you can kindly indicate by using the raise hand icon or let us know in the chat section. You can also type your questions in the Q&A section during the presentation. Thank you very much. I will now hand over to my colleague, Tayo Muritala, who will take us through the presentation. Tayo, are you ready?
Yes. Thank you, Timothy. Can we have the slide? If you could just help us project the slide.
Timothy, can you make slide sharing possible for me?
Okay, yeah, I can do that. Okay, go ahead now.
Okay. Thank you. White Timothy is helping us to share the slide. Thank you, everyone. Thank you. Good morning, ladies and gentlemen. Essentially, the presentation here is in twofold. And what I'm going to be talking about is product development practices among financial service providers, and also some of the challenges that they encounter in the course of product development. As you all agree with me, not all products launched end up meeting customer needs and expectation. And even in most cases, this is as a result of, practice by service providers. And the standard product development process actually identifies stages for delivering an acceptable product. And when any of the stages in the process is not followed through, there will always be low product adoption and cases where products fail. So products can also fail because of challenges confronting service providers. Timothy, next slide, please. So this presentation that I earlier mentioned is in two parts. The first part is on product development practice and by financial service providers, and this is to give us the understanding of the specific activities that go into developing a product. The next part will be on challenges, which are findings from our recent studies that we conducted. Sorry, I need the next slide. Timothy? Yes, thank you. Okay, so starting with the standard product development practice, here we have the process flow from concept to ideation, and the panel below each stage has a list of activities, resources, and tools required to be successful at each stage. If I start with concept, here we have idea recognition, idea sourcing, idea screening, concept testing, resources, techniques, people, process, activation, and control agents. Idea recognition actually looks into how FSPs recognize opportunities to create products that meet need. For sources, idea can actually be internally generated through contributions from employees or externally generated through feedback from the market. These ideas are further screened, and then the unique ideas are filtered from the pack. Another aspect in this process is concept testing, and this is the brainstorming activity that that is being followed in order to determine if consumer will actually understand, need, or even desire a product in the first place. There are factors that we always trigger FSPs to desire products, product ideas. And these factors, we group them under what is called activation. And this could include things like distribution gap, competitive gap, consumer need gap, packaging gap, and so on and so forth. At the idea generation stage, one important issue on the front burner here is what we refer to as control agents. And here, people in charge of product development, we have to recognize the need and, and are able to align the product ideas that they have with their organizational the organization mandate, and also should be able to obtain management approval and also approval from relevant regulatory authorities. At the next stage, which is the research and market exploration, the activity that constitutes this stage are market forecasting, market need analysis, market segmentation, market sizing, determination of growth potential, route to market, and also competition analysis. It is important that FSPs actually identify consumer need gap, where gaps lie. And it is also necessary at this stage to also determine the growth potential of the intended product over a period of time. They have to conduct market segmentation to better understand different attributes of consumers by interest, need, and location. Also to identify their market strategies to reach customers in different locations and territories. They will also have to determine which option to choose when it comes to sales, direct sales, using direct sales, or using retailing strategy, licensing, issue of licensing, joint venture, and also online sales. All are determined at this at the market research exploration stage. At the next stage, which is the business analysis, the key activities here are sales forecasting, use of business cases, identification of target market, the risk management. Analyzing business cases here actually helps FSPs to determine the product visibility and viability and identify the product compelling values that will meet the market's need at a competitive cost. So I have here the next thing that is important here at this stage is the sales forecasting, and of course, which is critical in the course of product development. And this enables firms to provide the estimated cash inflow and outflow, and by these FSPs will be able to optimize product values vis-a-vis the financial returns. Again, risk practice is a financial, in a financial institution, it is largely dependent on the size. It is also in risk management that we locate issues around compliance requirements, quality control as demanded by regulators, and most importantly, it is also required for the FSPs. It's required here for the FSP to be able to safeguard the stakeholders' wealth. The next stage is the product development stage. So the activities that are required for, basically the product development activities are the steps required in transforming concepts into products, and such include product design, things like prototyping and experimentation, product refinement, design for affinity groups and gender, trial production. When we look at these activities, we can also look at the resources that support the activities, which are people, technology, partnerships. Partnerships will always play a major role here. FSPs, we definitely have to take advantage of different mode of industry collaboration to deliver innovative products. Things like local and international collaborations with government, channel suppliers, agent network, technology providers, investors, and international agencies and companies are very, very important at this stage. So leveraging partners' technology, for instance, and outsourcing for automation is of importance, definitely. And also, they will also need to onboard and retain talent, the right talent for product development. It is at this stage that, that providers actually will engage in prototyping, like I mentioned earlier, and experimentation. And this is basically to evaluate a concept and determine its acceptance in the market before the final design and launch. I will quickly move to the last stage, which is the product launch. This is a process that gets product through to the market, and FSPs require resources such as partnership, talent, expertise, and technology. While we look at that, the key activities will include things like product forecasting, test market selling, budget planning, market planning, sales planning, and distribution, as well as distribution planning. For distribution planning, it is an integral part of marketing strategies to reach a target market in different geographies. So it's also necessary, maybe the FSPs, we have to hook up with the existing multiple industry-wide distribution channel, or simply create new channels to serve the market. That will have to be determined at this stage. By leveraging, say, existing multiple distribution channels and technology in a collaborative setting, for instance, and FSPs will be able to compete and also reach the last mile. So one other thing I also want to mention here is that the FSPs will have to engage in test market selling, and as a way of determining how well a product will sell when it's finally launched. They have to prepare things like the budget plan. You have to prepare things like sales plan, marketing plan as well, or simply because to have effective product launch. Essentially, this is the overview of product development process with activities at different stages. The hypothesis is that when FSPs follow this process, they will always, or they will be able to develop products that meet the market need. But why FSPs try as much as possible to take the required step in product development practice, there are challenges that always and will always limit the extent at which they can produce compelling products and meet the market expectation. So some of these key challenges that our recent study identifies are around, okay, I need the next slide, yes, thank you. They are around things like regulation, talent and manpower, IT infrastructure, security, third-party service charge, finance, market information and awareness, and partnership. Let me talk briefly about each of these to give us the highlight of what the problems are really about. So for mobile money, for regulation, under regulation, for mobile money operators, they actually encounter regulatory challenges and unfriendly policies that discourage innovation and launching of new products. The most important ones are the central bank regulation and the federal government TSA policy. The FSPs are sometimes held back from launching a new product for the fear of unexpected changes in regulation. Getting approval also sometimes takes a long time, and this reduces speed to market and the ability to meet customer needs at the right time. Although the regulators are becoming more receptive to new thinking, but the FSPs are still of the view that policymakers are yet to come to terms with types of environments that encourage innovation without boundaries. And the impact of the regulation, of course, if we have to look at other sectors like micro insurance companies, is less obvious simply because the ideas of new product development is nascent to the sector. Let me quickly move to the next one, which I would like to talk about, and which is talent and manpower. So developing new products, of course, as we all know, is all about onboarding right talent to develop, to help organizations deliver compelling value propositions to customers. Financial service providers or financial service product development project, essentially, they require inputs such as from development manager, product development manager. They will require things like the experts from market research analysts and also from software developers. But getting the right talent is a major challenge for most essentially the bank-led mobile money operators. For deposit money banks and aggregators, mainly because of access to financial resources, they are able to recruit young talents, and what they simply do is to take them through training. But even with this approach, they still confront high technology expert turnover rates. I mean, simply because of because of the recent emigration of talent in the country, which contributes to that type of challenge, to the challenge that they face in terms of talent and manpower. IT infrastructure is another thing. It's a major challenge, and the issue around that is usually manifest in network failure. And this is a common problem for most service providers and operators who depend on reliable network to support payment channels and also the operations of agents in remote locations. And sometimes product performance is greatly impacted by poor network, which leads to which costs to both service providers and also to customers. As a whole. But in general, FSPs raise concern about technology. They are also they are still challenged by the inability of their inability to leverage the co-location of infrastructure to serve a large market. For security, the challenge usually emanates from the activities of hackers cyber fraudsters, and of course, the safety of life and property in the country is one major concern to them. And sometimes this results into delay in service provision and setback that they experience when they have to provide or meet demand. Insecurity discourages, of course, the presence of financial service providers in some location, as we all know. Access to capital, which is finance, I mean, especially for long-term projects, is a general problem, not only to financial service providers, but also to other business operators as well. But the high cost of finance and the lack of interest in certain investment opportunity in financial service sector limits the speed of innovation in the sector. Where other things, market information and awareness. In that aspect, I would like to mention what the micro insurance providers are actually identified, because they recognize that there is lack of awareness and understanding of insurance product, which is a major challenge to them. I mean, for a sector that only recorded 2% of the Nigerian adult population as customers. So this same challenge, of course, is also experienced by micro pension administrators. Well, partnership is another thing which is very critical. The idea of partnership in the industry is definitely growing, and a lot of encouragement and motivation is still required to attract technology partners and other investors, that we have to fill the existing resource gap in the among financial service providers. So other challenges that you can see we identify are financial literacy and language barrier, cultural challenges, and also we identify the low adoption of technology. Ladies and gentlemen, I think at this point I would like to pass the button to my colleague, who will also take the discussion further. Thank you very much for listening.
Thank you very much, Omotayo. Very useful and enlightening presentation on the very interesting work we've done in highlighting extreme product development challenges. Distinguished ladies and gentlemen, moving from Omotayo's presentation, it's now my pleasure to introduce you to a product development process that can be adopted and holds the key to game-changing the approach financial service producers for in creating, designing, and launching financial service products. The human-centered design is actually a product development process that essentially involves designing for the people that are meant to consume the product or service. So as against the current process where the providers or the FSPs essentially focus on what it is they are offering and how they think the consumers should perceive it and receive it, the human-centered design process takes a reverse approach by building very deep empathy for the consumers, focus on understanding the circumstances of the consumers, and then makes concerted efforts to develop the solution by ensuring that the human perspective is adopted in all the steps of the design process, the testing process, the consumption process, as well as the use process. So essentially, ladies and gentlemen, the core principles of human-centered design include focus on the people. So for financial service producers to successfully use the human-centered design process, they have to take away their jackets and suits from the office and put themselves in the shoes of the consumer. How does that rural farmer in a village in Kano build their financial diary? How does that transporter in Benue go about getting vehicles, offloading passengers, and then delivering all the goals and expectations the passenger has? How do you expect that pepper seller in mile 12 to consume financial services? So the first step is that there is a very strong focus on the people. The second step is that financial service producers are encouraged to identify the right problem. So many times products and services designed for consumers do not actually address real problems these consumers have. The products either try to address regulatory challenges or try to meet competitive actions providers have seen their competitors take or make in the market. But then there is that intention using human-centered design to actually ensure that the process identifies the right problem. So why exactly are people not adopting financial services? What are the peculiarities around the person's circumstances? What specific needs does the individual's trade bring to the table? How does the individual's family structure, lifestyle pattern, social values, and all that, how do they play a role in defining how they actually consume financial services? And then another very interesting part of the human-centered design process is systems thinking. So in human-centered design, you think about every single component or aspect of the system. You're thinking about the user interface, you're thinking about the technology, you're thinking about the interfaces, you're thinking about the systems, you're thinking also about the regulation, you're thinking about cost to serve, you're thinking about access. And the last principle I'm going to talk about this morning is testing. So extensively, you have to test your designs. You have to make sure your designs are made and suitable for the consumers you're actually targeting them at. You have to constantly test, retest, and after every test process, you have to go back and then modify your design. So ladies and gentlemen, I'll play a short video now on how one of the most successful banks in the world that has tackled financial inclusion went about using human-centered design to actually change their process, just to get us all as regulators and financial service providers thinking about how this new and exciting process can actually change and drastically improve our outcomes, enhance financial inclusion, and change the way this market operates.
Since 1997, the Grameen Foundation has been helping the world's poorest become financially self-sufficient. At the core of our innovation process is the practice of human-centered design, a set of methods and guiding principles that help organizations discover and address the needs of their end users. While most organizations are really good at looking at their business goals, assessing their technological capabilities, and coming up with products at the intersection of the two, when they release their products to the market, they are surprised to find that nobody wants to use them. They have failed to consider the needs of their end users. As many as 95% of new products fail every year. To maximize the impact that every dollar has on the lives of the poor, we need to make sure that the solutions we create work. There are 4 key characteristics of human-centered design. 1, it's grounded in knowledge about users. Before we suggest solutions, we go out into the field to understand user needs, goals, and attitudes. 2, it's collaborative. Addressing poverty is complex. Such problems require broad and deep expertise and cannot be solved by one person or organization. Our teams are interdisciplinary and work closely with clients, users, and subject matter experts. 3, it's visual. Humans are visual thinkers. 30% of our brain is devoted to it, as opposed to just 3% for hearing. Visualizing helps us to understand problems, communicate complex ideas, and identify new opportunities. 4, it's iterative. Prototyping ideas early and often and testing them in the field ensures our concepts meet the needs of the poor before spending time and money on creating high-fidelity designs. At Grameen Foundation, we have combined human-centered design with scalable business practices into 7 phases that take the project from kickoff to scale. A project typically starts with a planning phase to set goals and deadlines. This is followed by research and synthesis. Actionable insights from this phase are used to inform concept development. Concepts are selected, tested with end users, and refined. Product pilots planned and launched to demonstrate commercial viability. Data is collected and used to roll out the product on a larger scale. This solution innovation process ensures that we create products that are both scalable and sustainable. To learn more, visit greenfoundation.org.
Thank you very much, distinguished ladies and gentlemen. So I'll be taking any few questions you have now before I hand back to Timothy, who will continue with the rest of today's event. So if you have any questions, just unmute your microphone and please ask. Okay, I can see some questions on the chat. Jane is asking, what's the difference between design thinking and human-centered design? So design thinking and human-centered design actually share. Design thinking and human-centered designs actually share similarities in multiple ways. While human-centered design looks critically at the person consuming the product and is essentially a process utilized to a very large extent by organizations in the development sector, especially when they're trying to create products for the poor, when they're trying to create products with empathy. Design thinking is a superset that essentially adopts the same approaches, but then is more widely accepted over a larger context, you know, over different other circumstances, different other situations. Design thinking is also essentially about designing and essentially ensuring that the user's perspective is incorporated in how that product is conceptualized and consumed. So they share lots of similarities. That's going to be my response to that. So I don't know, do we have any more questions? Comments? Okay. Okay. All right. Okay, so ladies and gentlemen, I'll hand back to Timothy now. It's actually 11:35. I'll hand back to him, but in the course of the event, please, if you have any question, feel free to still drop it in the chat window. Thank you very much. So Timothy, over to you.
Thank you very much.
It appears, Timothy, it appears your network is weak.
So we'll be taking our second presentation now from Tobe.
Okay, so Tobe, can you start sharing your slide?
Already, you can share your screen.
Yeah, thank you.
So try and unmute your mic.
Tobe, you are muted. You are muted.
Okay, thank you, everybody. Thank you. Thank you, Mr. Kim. Thank you, Tayo, for that excellent presentation on product development and challenges. So looking at Tayo's presentation, we could identify regulation as one of the challenges FSPs face while developing products. So we took a delve into a survey trying to identify the impact of policy and regulation on the development of inclusive digital financial services products and services, so that we can know what actually pinches the financial service providers. And the questions that got this survey was practically divided into two parts. The first part is on question 1 to 3, as we can see on the screen, looking at trying to identify which policies, regulations, legislative measures affect or motivate financial services providers from developing inclusive financial products and services. And we're getting their perspectives on the reasons why they think it either motivates or is an obstacle, and how these policies can even be refined. So they gave suggestions as well. And it was mainly a qualitative study. A semi-structured interview guide was developed. Some filled it as a questionnaire. We also collected data through telephone interviews. We had about 41 respondents cutting across financial service providers, regulators, development organizations. So going deep now to our research questions, as I said earlier, the first part was on policies that motivate FSPs to develop inclusive financial products and services. And our findings reveal that policies that motivated them ran across from the cashless policy regulation down to data protection. But the prevalent policies that came up in the data were cashless policy, tiered KYC regulations, BVN initiative, NFIS 2018 refresh, agent banking regulation, and others. And when asked the reason why how these policies motivated their development of inclusive financial products and services. So cashless policy, our respondents identified that it forced FSPs to explore digital payment solutions. And this solution, they were able to target it to meet both the banked and the unbanked. Then the tiered KYC regulations also enabled them to reach the excluded more because they could provide financial services to individuals with reduced KYC requirements. Then regulations on agent banking, they also confirmed that it enabled banks to reach and target the unserved, the excluded. While regulations on TACAFU, microinsurance, bank assurance guidelines enabled the registration and penetration of insurance to the excluded. Also identified was the NFIS 2018 refresh, the National Financial Inclusion Strategy. Our respondents identified that this strategy gave a platform for all regulators, PENCOM, NICOM, to then develop regulations that were targeted at FI goals. In fact, you could see one of the comments there from one of our respondents specifically pointing that this led to the micro pension plan, which has enabled the pension fund administrators to reach those in the informal sector. Another regulation identified as a motivator was the mobile money operators. It enabled digital innovation and competition more, and it also enabled the FSPs to reach more users even at the last mile in different geographical locations. So, but when we went further to ask them, okay, these policies are good, they motivate, how can they be refined or further developed? For cashless policy, our respondents identified that one way that regulators or the federal government could help is to give duty waivers or reduction on DFS equipment, because to go digital, creating these solutions to meet them in a way that is not cash-based, you have to deploy DFS equipment, which are still quite expensive for them. So an incentive could be a waiver of duty or reduction. Another was on the point identified earlier, the regulation identified earlier, which is the tiered KYC. And they identified that it would be good to have an electronic KYC framework for Nigeria. And it would also be good to push KYC to telcos and other financial institutions, so they can serve those at the last mile better. And then also for the regulations on agent banking, most of the responses we got was that the removal of stamp duties would greatly help agent banking transactions to move further and also to deepen their penetration, especially at the last mile. And for mobile money operations guidelines, our respondents suggested an interoperable platform between banks and MMOs, specifically to make person-to-person transaction simple and easy. While for the micro pension plan, as we identified earlier, because this is one of the plans that came up from the NFIS strategy, which has really helped the pension fund administrators, but they're asking that if it could be reviewed, that there'll be partnership between the PFAs and other financial institutions to drive micro pension plan in such a way that The micro pension plan allows you to save 60% and then 40% for contingency fund. So this 40% can be used as a collateral in banks by the customers to get other financial products like credits. So if this is possible, it will drive customers to adopt and get a buy into pension products. Then we went further to find out what policies actually serve as an obstacle to development of inclusive financial products and services. And these are the prevalent policies that came out of our survey. The first, as we see on the chart, is Customer Onboarding Policy, Finance Act, especially the Finance Act amendment of tax laws, core infrastructure, competition. And we went further, as the research question identified, to look at how has these policies actually been an obstacle to them. And the response was that for customer onboarding policies, difficulty with getting named, KYC requirements, anti-money laundering requirements, stifles customer buy-in for them and service adoption, especially for banks, pension and insurance companies. In fact, the examples that were given was that banks, to get NIM is difficult. You have to go pay a NIM agent to come in to provide NIM to your customer before you can then, they can adopt your service. And this also discourages the customers. Then another is customers' failure to divulge information for KYC to insurance companies. If you remember the presentation by my colleague Tayo, he mentioned that insurance companies are saying, lack of awareness for their products. And you still find that in our research here, this was a point mentioned also by insurance companies stating that customers are not willing to easily divulge their personal information, especially BVN and NIM for their products. And also this stifles the onboarding process. The Finance Act, the amendment of tax laws looking at stamp duty, VAT, and other tax regulations, respondents also identified that it stifles agent banking, especially the stamp duty charge on deposits, because these agents are cash-based locations and they will need to deposit large sums of money for multiple products. So this actually stifles their operations and discourages them. And also it discourages electronic payments, encourages, and then on the other side now encourages cash payment. And this led to the respondents saying, so it seems like the regulations are inconsistent and unclear, as on one side the government is saying, please, we don't want transactions over the counter, and then there are now charges over deposit and the use of some digital channels. Another policy, as we saw in the chart earlier, was competition. From our survey, this was, we got diverse opinion from our respondents. Some respondents were saying not allowing telcos fully into the digital financial services space, like in mobile money, agent banking, and others to operate fully as financial institutions, that this limits reaching those at the last mile, because these telcos actually have the data and the information for customers in different geographical locations, even the rural areas. But we have had another sector of our respondents stating that giving PSB license to telcos may be good, but the government has to find a way to create a framework that will make it not to be an unhealthy competition among other players who are already in the space. Another policy that was identified as an obstacle was inadequate attention framework for microfinancial institutions. So respondents from the MFIs who were interviewed indicated that most of the overrun or the management of operation of MFIs was by the AMFI, the Association of Nigerian Microfinancial Institutions. And because the CBN wasn't really having a deep oversight like the way they had urban banks, it makes room for no standardization in operations and consumer protection, so that one MFI treats a consumer poorly, and then there's no way to call that MFI to order truly, and then it spreads to other MFIs and consumers are really not adopting. Another significant policy identified as an obstacle is pricing regulations, especially the guide to charges by banks and other financial institutions, and the POS charge. The POS charge was identified by our respondents as making agents and merchants operations to be non-viable. It is non-viable for them because charging them, disaggregating these charges actually increases their cost of doing business. And then it also stifles innovation and competition, as they're like, if if regulators peg these prices, they're not taking into consideration the cost for bringing this product to the scene for consumers. Another policy that was identified is poor infrastructure, high electricity tariffs, bad roads, as this is a result of this leads to high cost of doing business even for the SMEs. So trying to still get the perspective of our respondents, we went further to ask them how best they think these obstacles that have been identified can be reformed or reviewed to better serve them to meeting this financial inclusion needs and churning out digital financial products and services. And for the customer, the challenge with the customer onboarding policies, suggestions were made. One of them was to allow banks on board like fintechs and to allow pension companies on board like banks. And the example given was fintechs, the respondents were of the opinion that fintechs are allowed to onboard customers in a very simple way, like you just need to log into a website. Sometimes for our other two banks where we save, you log in, you create your email address, but they don't really require as much detail to see the type and the reach of customers that the banks can bring into the formal financial service space. And also the pension companies are clamoring that if you can allow us to onboard by like banks, giving an example that if ATM machines, and you can even create an account from an ATM machine, and at a point maybe when your money gets to maybe 20,000 or 50,000, there's not a threshold that if that would be allowed for them, that they onboard customers, then maybe when the savings get a necessary KYC details. Another was to allow FSPs to act as agents for NIM registration, mentioned earlier. But when at the point of interview with our NIMC respondent, we found out that this particular suggestion is already at the implementation stage for the NIMC due to this digital identity project that is being funded by the World Bank. They are going to look at this project as in an ecosystem with an ecosystem approach where both public, private companies, and even the banks will act as agents for them. So we can say that this is already in progress. This particular suggestion is already put in. And then another was to sensitize customers on the importance of KYC details so that even for the insurance companies, customers will be willing to give their BVN and NIN. And this cut across not just the FSPs to other regulatory institutions and also the federal government to push this awareness of sensitization. Another significant policy that was identified as an obstacle was tax law, as we said earlier, and the suggestion given was to stop stamp duty on agent banking transactions. For pricing regulations, like guide to bank charges by banks and other financial institutions, it was suggested that regulators should have an inclusive discussion with FSPs, where the heart of FSPs when making the decisions, bearing in mind that they are into business for profit making. And another suggestion was made on the issue of inability to leverage fully on telcos, as we mentioned earlier, that telcos have this data to reach consumers at the last mile. And one of the suggestions was if there could be a platform that will serve as a pool of the telcos data where everybody in the financial service space in the DFS ecosystem can have access to that data to reach consumers, not to push this financial inclusion needle. And for the lack of attention of framework or inadequate attention of framework for the MFIs, suggestion that was given was, okay, the CBN, Ministry of Trade, Ministry of Finance can come together to develop a specialized framework that will guide the activities of the microfinancial institutions. And there was the opinion that this would not only give a form of standardization and checking where there is an error from any MFI, but it also helps CBN to track and get information from the MFIs that will drive them to make better decisions and better policies. Thank you very much. And these are all we identified as motivating policies and policies that serve as obstacles. At this point, I will hand over to Professor Ajayi to speak to us on the insights that were drawn from this research. Thank you very much.
Thank you very much, Tobe, for doing justice to the research results, presentation of the research results. And may I also say thank you to our distinguished participants for being with us this morning. The colleagues have presented the product development process, including HCD, and some of the insights they gained as to the complaints of FSPs, and also the good things that the regulatory framework delivers to them. I should just like to give very briefly insights on the presentation that Tobe has given, looking at how policy and regulation can enable or inhibit product development. So it seems clear that creating an enabling environment, competitive environment, and maintaining that environment was, by the respondents' perspective, the most impactful policy and regulatory intervention that has promoted product development and financial inclusion. And so the idea is this is the way to go. However, competitive activities and consumer protection would need to be monitored in order to avoid creating undue dominance by any player or sector, also to improve, increase, and continue to maintain consumer trust. Parallel infrastructure is a major disincentive. FSPs have tried to work their way around it. We all have, I believe, but we certainly do need to ensure that infrastructure is improved and to get to the last mile. Telco infrastructure in rural areas is a very clear one that we can bear in mind here. Another major insight is that measures supporting digital infrastructure and transactions are critical in promoting product development and financial inclusion. Of course, DFS appears to be really the way to democratize financial products. And the more we can support digital infrastructure and transactions, I think the better and the quicker we will get to financial inclusion. And this is something, of course, that has been identified as a must do. It also seems clear that policy and regulatory measures that are designed to incentivize behavior change have been more effective in promoting inclusive product development rather than those that are restrictive, prescriptive rules and emphasis on compliance enforcement. So this is something that regulators may want to work into the design of policies and regulatory measures. It is also clear from the research results that good regulatory quality has been the greater positive influence incentivizing product development, market discipline, and innovation. What is good regulatory quality? The pictorial on the slides, I think, speak to regulatory quality. It's clear that going forward, we have to also be careful about self-regulation, which indeed is, how do you call it now, is encouraged by the better regulations principles, but this has to also be monitored and supervised. And again, it's also important to ensure that stakeholders are consulted, are kept on board. I think the comment of one of the respondents is very illustrative. Another insight is, other insights are that risk-based measures, which are proportionate and focused on the most essential objectives, have been more influential than prescriptive rules, outcome-based measures. For example, with the tiered KYC, I mean, at the beginning, everyone probably thought, oh, it has to be 10 fingers and 10 fingers alone. But with the tiered KYC, there's been sufficient safety, contribution given to safety, and that has also allowed for flexibility and innovation. So obviously that means that regulatory innovation, openness to experiment is really very influential and key. It's certainly clear that a minimum digital identity is required, and apparently the tiered KYC has delivered on that requirement. In fact, looking at what to do going forward, the respondents suggest eKYC, because they say relaxed, even more relaxed measures, followed by curbs after recruitment, may be a more effective way in driving faster inclusion, or at least, quicker, larger onboarding. And also, the respondents would like to see flexible regulation, allowing creativity and innovation. I guess this is almost like HCD for regulators, actually, because this is more or less looking at the FSPs, looking at the customers, and trying to make sure that regulatory measures empathize with them, and of course also deliver on their own interests and achieve regulatory objectives. Always, implementation is important. And I think the respondents are reminding us that focused implementation is what will get us to financial inclusion quicker. And that means that other policies must be aligned with financial inclusion objectives to avoid counterproductive results. The issue of taxation is very clear. It imposes negative effects at the unserved and agent level. And whilst we must tax, this suggests that greater coordination and policy coherence must be kept in sight at all times. The issue of charges, I think this is something regulators are aware of and trying to work around, but this is something that we always have to balance and try to make sure that we're as flexible and creative as possible. Another insight, of course, is that the NFIS, that's the Financial Inclusion Strategy, has supported and can support coordination among public and private sector stakeholders. It provides an organizing framework for financial inclusion policies and regulations to be implemented. And in various ways, we have seen that this type of framework has actually given us quite a bit of mileage. We can see that in micro pensions, micro insurance, and continuing work in that direction. We can see that in the softening of the stance on the governors in right of way. I mean, policies like PSBs, telco super agents have been made easy because of that collaboration between regulators. So these are some of the, I think these are some of the insights that we can take away from the survey. And so we've been speaking at large and at length. Someone says we will appreciate if the slides and video can be shared immediately after this session. Yeah, okay, fine. I think it's useful for us to get some feedback. Do these research results and insights appear to be in the right direction? What are some of the explanations that regulators may want to bring to the table? What are some of the learning points that seem interesting to regulators, to FSPs? How can we advance financial inclusion? How can we advance the development of inclusive products with the data that we have just presented? I don't know, Timothy, do we have your permission to go right away to a dialogue session? Can we get feedback? And I see that, Timothy?
Yeah, yes, Prof, we can go into the dialogue session now.
Right, okay, I can see Dr. Oluipe of the FIS has his hands up. Please, I believe you can unmute yourself and speak, Dr. Oluipe.
Good afternoon, everybody. Good afternoon, sir.
Good afternoon, sir.
Thank you for the presentation. And can you hear me?
I think probably you may want to, well, I don't know. Maybe I have to increase my volume, or maybe we both have to increase it a bit. I can hear you because I've increased my volume.
I've done so at this end too.
Okay.
Yes, the last presentation touched on very wide-ranging issues, especially around regulation and its impact on freezing the space for financial inclusion to thrive. I'll touch on quite a few of these issues. I recognize the feedback from customers, from stakeholders on the impact of regulation, and these are issues that are very dear to their heart. But it is very necessary that we provide a context, a regulatory and policy context, because some of the issues that are being proposed would mean adjusting or regulation or the enabling act of CBN or any other regulators here to be able to provide traction on. For example, we run a bank-led model of mobile financial service or mobile money in Nigeria. And with the exception of Kenya, where there is a telco-led model, there is no other jurisdiction that has gained significant traction in terms of leveraging, accelerating financial inclusion using the telco model. Kenya is a poster child for that, but then it is not a sufficient case or a sufficient or credible value proposition for adopting a telco-led model. The downsides of a telco-led model is actually the issue of consumer protection, and then also reporting and you know, the reach of the regulators. Because a telco is not a financial institution, and some of the telcos that you have aren't even, you know, resident or domiciled in Nigeria in terms of ownership. So you begin to look at prudential issues, integrity issues of data integrity and protection of our markets from exploitation. So, and then the regulators are vested with the mandate to regulate the financial services space, and anything that has to do with money, financial transaction or currency, you know, is vested with the Central Bank of Nigeria. And so you would need to really have a significant change of the act or mandate to be able to allow telcos play in the space. And so if you consider issues of financial consumer protection as well, but given the research that I have quoted about Kenya being the only poster child for financial, for telco-led model in Africa, if you have any other jurisdictions that have really gained significant traction, I'm open to learning, and then we can share that. Then
Sorry, Dr. Paul, maybe before you go on, we'll take your other points, but I do think that I'm not sure the research is suggesting telco-led model. Actually, I think what the research is suggesting is to ensure that we leverage on all the possibilities. So I'm not sure in any of the, I've not seen any outcome of research saying we should adopt telco. Actually, I think what seems to be what the research seems to show is that a competitive approach of telco or bank-led is somewhat restrictive. I think the idea is to leverage all the other stakeholders, allow competition. So rather than say telco or bank-led, I thought probably
a hybrid, maybe a hybrid.
No, it's more about integrated approach, I think, so that we don't get off the mark.
I understand that. Yeah.
Okay. Thank you.
I understand that.
Okay.
But we have to look at the issues of data integrity and the issues of consumer protection that probably arise with telcos.
Yes, and I think Jane is speaking to the point that even the PSBs is allowing telcos into the space, super agents. So it's about leveraging these other players. I think that the research is actually highlighting that these have been positive. In fact, that these have been positive developments, or maybe may give even more mileage and traction. I think probably that is the case.
Yeah, that's what.
Okay. So we can take your other points, sir. Yes, sir.
And the point of standardization of MFPs, microfinance banks, actually is a bit convoluted in the sense that in the first place, we've liberalized the players, the playing space in the microfinance sector, where we have national, regional, and unit microfinance banks, and we've allowed microfinance banks to set up an operating template in their area. So I don't understand particularly the issue of standardization. I feel it should be more about customization of products, customization of services to suit the environment and the context where you operate, because microfinance banks are there, to provide customized services in a locality, in a localized space, framing their services to suit the areas where, they are serving. That's why we have unit microfinance banks. So maybe I should be educated more on standardization. Is it in terms of regulation? Because we have a standardized regulatory toolkit in the Central Bank of Nigeria. It is not disparate, it's not divergent. What we do is standardized, and we regulate the microfinance banks with that toolkit and with that template. So I don't understand that part. But in terms of engaging the Federal Ministry of Finance and the Ministry of Trade in standardizing the MSB space is also a bit, blurry for me to listen, because we work in tandem with the fiscal authorities. We get input from them. We work hand in hand. There is this coordination between us and the fiscal authorities. But in terms of regulating the space, we have an operating template, we have an operating standard and procedures for microfinance banks. Maybe she can throw more light on standardization. There are multiple other issues, but I'll pause here to allow others.
Okay, thank you very much, Dr. Oluikwe. I'm sure we will get a response, but I think the idea is that you can have more interaction with this data, and then obviously the dialogue can continue. But I'm sure we'll throw more light on that. Doctor, we have Kudu AM. Okay, yes, it's a Mr. Kudu AM. Good morning. Yes, please.
Good morning.
Yes.
From Federal Inland Revenue Service.
Yes.
Thank you very much. This is a good topic, and it's good we are unbonding our differences now. That is why the first paper presenter under the conceptual framework couldn't recognize the stakeholders' position. And that's why most of the products will have been developed. At the end of the day, they will suffer some setback in relation to taxes. So at the point when you are conceptualizing, I believe you should take into cognizance the stakeholders' position. By the presenters, somebody said Finance Act is not in operation. Finance Act has been in operation. You look at current VAT has changed from 5% to 7.5%, and every that is connected thereto. My first issue is the presenter said the Finance Act is not clear enough. If we can get those sections that are not clear enough, we'll be able to suggest some amendments. Because when Finance Act came, most of us applauded it because it threw open most of the gray areas and resolved most of the disputes that are associated with tax administration. Be that as it may, I must put this forward. The stamp duty we are talking about, it has two dimensions. But one thing is certain, if you are not ready to create intention, if you are not ready to create legal relation on any transaction, you are not currently forced to do that. But for the deposits and transfers above 10,000, naira is a small money. And companies came on board that actually support the financial inclusion program. The minimum tax removed just to disallow the capital base to be eroded completely. Asset reflected. It is called that even VAT, the threshold have been introduced so that people with lower income are not unnecessarily subjected to tax. That even rendition of return. There's a bonus now for early payment within 90 days. Things were not there before. Everything that surrounds financial inclusion, the tax environment is worried of what happened to taxpayers' cash flow. And that is why Finance Act 2019 came up with a lot of amendments that actually make it much more easy for taxpayers to comply these days. The other side of it is that we introduce e-services that make services easier for taxpayers to stay from your comfort zone, transmit return, make your payment, process your, unlike those days when a taxpayer will even hire a consultant to go and procure, to go and process receipt and pay hundreds of thousands. These days we get some of those things online, or to save taxpayer from further spending in terms of tax compliance. What am I saying is that the Finance Act actually clears some gray areas in terms of tax law. Contentious areas, some of them are now being clearly defined. And if there's anything that is not clear, please let Federal Inland Revenue Service know so that we'll articulate all of them together. When the amendment commences, bring them forward for the committee to review. Thank you.
Thank you very much, Mr. Kudu. I guess probably the complaint is not much about clarity, but really about tax chilling financial inclusion. I guess that's really the more significant comment that of feedback. But it's good you've mentioned you'd like to see the data, you'd like to look at this more, and this is why this type of forum is very useful. We have Jane, and then we'll also have the pleasure of listening to Mrs. Lawson. Jane.
Good afternoon, all.
Good afternoon.
My question has actually been addressed by Doc on the chat. So I just wanted him to clarify how keeping the telcos away was going to protect the investments, since they are already being given the PSB license. Wouldn't that be bringing them into the space as well? So I just wanted to know the difference, but he did explain that in the chat, that it looks like the PSB license is a bit limiting.
Yes,
And what would have been given to the banks?
Yes,
thank you.
Thank you very much. The PSB license does not allow the telcos to create credit and so on. But I have no doubt that that is one of those rule-based prescriptions that may not work, because there may be more creative ways of going around that. But that's just a supposition. We have Mrs. Lawson, and then Mr. or Mrs. Akimade. Yes, Mrs. Lawson.
Yeah, thank you very much. Good afternoon, everyone. And I want to commend the researchers and papers that have been presented so far. They've quite been insightful. And so I want to comment on two areas. One is that issue of the stamp duty. And then I'm not sure whether it's Dr. or Mr. Kudu's response in terms of that stamp duty, that because they've allowed above, 10,000 naira and below not to pay, that addresses the issue for low income households, but it really doesn't. What has happened is that when you make payments to merchants in different areas, because they have to pay the stamp duty on every single receipt using electronic channels, they pass that on to the customer. So if, for instance, the customer wants to buy food in the morning, food in the afternoon, clothes, and so on, by the time you add up all the stamp duty he has to pay, he will prefer to pay cash. He will prefer to pay cash than to pay that stamp duty. So for wholesale merchants, for small businesses who have collections, maybe multiple people are coming every day. Can you hear me? Multiple people are coming in. Multiple people are coming every day to make payments. That stamp duty is a significant deterrent to the use of electronic channels. So that's for the stamp duty, and I would actually advise that it's reviewed. In fact, in recent terms, I was seeing some discussion around when you even send a receipt through WhatsApp, that will now constitute a receipt that is chargeable by stamp duty. I don't know how true that is, but we need certainly clarity and information around stamp duties so that that doesn't send us back in terms of financial inclusion of channels. The other area I want to raise.
Sorry, just before you go on, Ma, I'm not sure, was it my own connection that was not clear? We lost you a bit there. I don't know if others also lost her.
No, we heard her.
You had her. Okay, fine, please.
Yes, we heard her.
Please go on, Ma. Please go on. Please go on.
So the second area is actually around what Dr. Paul said for microfinance banks being limited within a geographic area. My view actually is that regulation needs to review that further, especially now that we are going digital. From one location with digital channels, you can serve the entire country. In fact, you can even serve globally. So one of the things that I would say that regulators need to review is that geographical limitation around licensing, because given the new digital structures and channels, that somewhat now seems irrelevant. I know a number of fintech companies that use microfinance license, and your office is basically your website or the digital channel. So where are you located? Who are you restricted to serve? So there isn't clarity around that geographic location issue. So if I'm a unit microfinance bank, say in Surulere, who do I serve? Is it only people in Surulere or anybody who can access my website or digital channel across Lagos State? So I feel that there's now time to review that national unit and state structure, because given the availability of technology, is becoming more and more irrelevant. Thank you.
Thank you very much. I don't know whether I can see that for
Hello? Hello,
but I
Prof. You are
think
breaking up.
you had those comments. Oh, okay.
Hello, Prof. You are breaking up a bit. Can you take that again? Immediately after Mrs. Lawson finished talking, there was a bit of breakup. This is from us speaking. Hello? Am I one breaking up or is Prof?
Yes, I
Wow.
I
Hello?
think
okay,
it's probably
buffering. Okay, is it better now? Is it
Okay,
better?
okay. It's
Can
better
you
now. Please,
hear
could you
me now?
just take that again? All that you said after Mrs.
Hello?
Lawson finished talking. And Prof, could you please take
Okay.
all that you said after Ms.
Right.
Lawson finished talking?
Yes, what I said, yeah. Okay, yes. What I said, we have two more people whose hands are up, and I hope Mr. Kudu from FIRS was able to take in comments. I also believe Dr. Olukwe took in her to come back on those comments. Can we listen to Mrs. Akimade or Mr. Akimade, please?
Yeah, okay, thank you. Good afternoon, everyone. My name is Fuwa Akimade. I work with Unity Bank. Thank you for the research. I'm eagerly looking forward to getting the data. This kind of thing makes our job much easier. The concept of human-centered design is really quite encouraging. I just have a quick comment and a question, kind of. My comment is, once in a while, the things that go to the markets, slightly, the responses that we get from the market often differ from the research. I'll give a little example. Before we embarked on agency marketing in 2018, we had a focus group somewhere in my bank in the Northwest. There's this area we call the KKJ Triangle. That's Kano, Katsina, and Jigawa. They have a huge number of banks there. So anyhow, what most people said that they wanted was a simple, no frills savings account with USSD, which is what most banks and most agents went there with. But in the last 6 to 7 months, we've been getting a lot of pushback or a lot of demand for debit cards. It's been quite odd. So we now have to put in a structure whereby this is an area, for instance, there's some areas there that the nearest ATM is 40 to 50 kilometers away. But they are actually asking for them. So there are 3 deposit money banks that we know that have started issuing cards as far back as January. So we just started doing that last month. So I just wanted to add that with the research, at times, the feedback that you get may change over a 2 to 3 year period. So that's just an additional comment. Now, majorly from where I stand, and then again, I will say this for me personally, in terms of products, I'm not quite sure. I'm not making excuses, please, but I'm not quite sure that there's anything extra that can be done. The market is happy with the tier 1 product or wallet. But where I see the gap and where I think we can come in as an industry en masse is that everybody is selling the no frills, cash in, cash out. What we should be looking at right now, I am very, very certain, is how to have a national micro insurance or micro health policy of sorts. That I think is.
I think you're breaking for.
Okay, yep. Hello.
Yeah, that, but I wasn't sure whether it was my connectivity that was poor.
Okay, all right.
But perhaps
Please,
can you kindly repeat? Yes, can you kindly repeat all what you said about everyone being happy with tier 1 accounts, but what else?
Yeah. Okay. So from what we see, and then again, I mean, that's from my little space. People are quite happy with their tier 1 accounts. They can receive money, they can pay money, and so. But I think that the next area that would bring a lot of the unbanked on board is if we could agree on an industry framework for micro insurance or micro health, so that people are getting something extra. I think will be the next key, honestly, because a lot of people are able to cash in, cash out. We still have a lot of people who are not banked, but what we see is that for many of them, that's 10,000 naira they have. They would rather hold it in cash than open an account and pay it. But if there's some added incentive coming through micro insurance, micro health, that I think would be very good. So those are my comments. Thank you very much. In case it was breaking up, I'll type it as a chat because I'm not quite sure that Prof heard me. Prof's image is hanging on my system right now. So I'll go to post it as a chat as well, just in case.
Thank you for maybe a very quick follow on. Is that no? Yeah, I think we got to now. I just wanted to. Okay. I wanted to just a quick question on that, Funwa. Should that extension of service not come by innovation? I mean, yes, obviously we must improve and increase the value chain of activities, and I think our webinar on COVID-19 days ago spoke to this. This is an African-wide recommendation that you are giving, actually, that you are.
I think we lost Prof there. I think we lost Prof there, the network issues. So Funwa, we look forward to your comment in the chat while you put that up. We don't know if there's any other person who has questions and may want to ask.
Sorry, I lost you there. Yes, hello, can you hear me?
Prof,
hello?
Yes, Prof, we can hear you. We can hear you.
Okay. Yeah, yes. I just, sorry, I lost you there. And I can see the connection is still a bit unstable. But I wanted Funwa to just reflect. These are opportunities. Are these not opportunities for product innovation? Is there something else that regulation needs to do to get players to move into micro insurance and micro health? You can please reflect on that. And let me see who else is ready to speak. Okay. Okay, perhaps we can take. Hello?
Hello?
Mr. Kudu?
Yes.
Okay, we have Abdulaziz Oguntoyebo. Please make your contribution.
My one
yes.
is tax is not impediment to financial inclusion.
Abdulaziz Oguntoyebo, can you please make your contribution?
Hello?
Okay. Good afternoon, everyone. Thank you very much for this opportunity and all the insight that has been shared. I think my name is Abdulaziz and I work with a fintech startup called Isusu Africa. And we provide digital platforms to cooperatives to local thrift collectors and MFIs, particularly traditional financial providers, to automate their processes. So basically, with the experience we've had working with MFIs, cooperatives, and agents that engage in Isusu collection, we discovered that it's highly pertinent to note that because of the huge informal sector transactions we have, particularly in Nigeria. So this market, these traditional financial providers, especially MFIs, needs to be put in place in terms of policy, how we can actually work, develop some policies that will bring them on board. Because I'll be talking from practical use cases from our existing clients, and this is very, very important for us to note that at this point of pandemic, the effect it has had on them, because some of them, they are actually focused on working with physical, transactions, physical contact, cash-based transactions, where they send collectors to go and collect money from. And several products can actually be tailored. Just to support what Mr. Funwa said around micro insurance, micro health, I think it's always it's very, very important developing products that also cater for the needs of these informal people, particularly the last mile. How can the policy also be drafted to support them? Then working with fintechs, like us, how the government can also support that, basically in terms of, because if you look at the flow of what is really trending, we have the digital banking. Even banks are trying to reduce cost to focus more on digital banking, API banking, partnerships with fintechs, ATM banking. Working with state governments and local government is also very, very important. There's no how financial inclusion would reach the last mile, impact the last mile, without working with the local communities, with the local government, with state government. I think it's also very important for us to factor in these stakeholders, particularly the MFIs, working with the local communities and bringing up different products, particularly on micro insurance, micro health, micro asset leasing. With the use case of Isusu, basically we're rolling out a product with 3 micro HMO firms very soon, which I believe will actually increase the financial health for this last mile. So I think the regulators should also put in place policies that will support and enhance these MFIs. And most of them that are actually tied to physical cash collection. For instance, like I gave a use case of an MFI that started with us last year, and they've mobilized several money with the platform to enhance their processes. And during this lockdown, several, because the money they mobilized as is actually tailored towards investment and also loan to some other customers that need it. And most of all the customers that were affected, during this lockdown were requesting for their money, to the extent that the MFI was unable to meet up with liquidity, obligations. So that they actually contacted us as a fintech partner, partners in progress. What can you do for us? Is there any government support that can actually, give them this incentive? Because they are about it. Some of them are even trying to even shut down. These are the people working with this last mile, working with other financial service providers to help them sell their products to their customers. So I think working, with these MFIs will go a long way to deepen that, financial service delivery to the last mile. Thank you very much.
Thank you very much, Mr. Oguntoyinbo. Mr. Fasasi.
Hello, sir. Good day, all.
You're welcome.
My name is Fasasi Sarafadin. I run an agent network. So I think I must commend FBS for putting up this discussion, especially this time. And we may not really see the impact today, but the effort of many years ago is actually coming out today. It's reflecting in the policies of today. I could remember the last conference, one of their financial inclusion conference in Abeokuta, organized by FBS. I discovered that financial inclusion is an ecosystem thing. We cannot just be expecting a fintech or a bank. It's a collective thing. So that time when I observed, I could see among the delegates invited, I could see police, I could see ministry, I could see national ID. I was asking myself, why all these people in financial inclusion? But today, I can see that all the stakeholders are relevant, because when you don't carry national ID along, it will be an impediment to account opening. So inclusion is, will be inhibited, So when you don't carry police along, by the time you are saying, okay, during lockdown, you are exempting the essential service provider, police will be locking them down because they don't understand. They don't, you don't carry them along. So today, I think I must say it is a collective, effort. It's an ecosystem thing, and I'm happy that FBS is one of the major, stakeholders that really have this understanding that we just have to, pull it together. I want to comment on our regulators, especially in our policy formulation process. I can see that I am aware that quite all right, there is a laid down procedures in CBN, in terms of the policy formulation and the likes. But I think we need to expand the level of our consultation before we even roll out policies, because it is possible that the internal feedback mechanism, as if we don't really, include the, outside opinion, a dissenting opinion. So in front and back. So we can see the example in the setback that stamp duties, implementation, the general overall, a blanket implementation of stamp duty has actually, inflicted, the pain it has inflicted, on the financial inclusion effort, before they now realize that, oh, we have made a mistake. But assuming they have expanded that scope of consultation before final rollout of policy, honestly speaking, they don't need to go back and say, okay, there are some segments of the society that we need to exempt, so that financial inclusion can actually grow. So today, I want to advise that we need to involve and engage more the policymakers, so that there won't be so gap between, the real players of financial inclusion and the policy, and the regulators. So I think this is very key. Another major opportunities that I think we blew up during this pandemic was the government's involvement, especially, we are driving financial inclusion, but the regulators are still the one, distributing cash, taking cash to far north, where you have agent network that should have actually opened wallet system where you can actually work with and distribute to them. I observed something in Katsina, in one of our locations. Most of the people that receive this conditional cash transfer in cash, they were bringing that money back to our location, that please can we just, save with you and things like that, So something that would have been, part of, okay, just come to our location and collect your money. It would have been that so easy. So I think going forward, regulators need to work with, the stakeholders, by the time they are rolling out all these important measures. So recently, I can see a forward trend in disputes, because dispute resolution has been a major challenge to financial inclusion product generally. When we look at USSD, why is USSD not flying today? Why is it? Because of, you know, poor narration. If you do a transaction through USSD and a beneficiary will not even know who deposited, you know, there won't be, it will easily be maybe a code. You just see code narration, you know, and this will cause, you know, dispute issues. And in fact, recently CBN rolled out new dispute resolution measures, which is highly commendable. You know, limiting on-bank dispute to 24 hours. You know, an interbank dispute to 3 days maximum. This will engender trust. You know, this will make people know that, you know, I can't wait forever if I have any issues in electronic transactions. So I think we are getting there, and I'm happy that, you know, CBN is actually moving in this direction too. So I want to encourage us that we do more of consultation when we are trying to come up with our policies. Thank you very much, sir.
Well, thank you very much. That is what is called sandwich method. You want more consultation, but you're also thanking the regulators for doing better in terms of stakeholder interest. Okay, let's listen to Abednego Ugweke, and then we'll hear Jane. Abednego Ugweke.
All right, good afternoon, everyone. Abednego is my name. I work with First Bank of Nigeria, and I lead the financial inclusion services effort of the bank. I think, you know, this forum has thrown up a lot of very interesting issues from a policy perspective, from a product development perspective, which of course will be very relevant, you know, in refining some of the things that we're doing. And just to mention a key learning point for me is really the issue of focused implementation and consistency of policy initiatives, which was brought out in the survey that was done. And I think the comments that from a number of the participants, you know, have brought out some of the areas that those consistencies or perhaps inconsistencies, you know, exist and should be addressed. And just to reiterate, you know, on a number of those issues, I very much agree, given the experience we have with running the agent network in Nigeria, that the policy on stamp duty for financial transactions, in addition to the VAT that already is charged to the consumer for the value, is really an inconsistent initiative, right? Today, about 44% of the transactions done at our agent networks nationwide is cash. And what that means is people bringing out physical cash outside the banking system to, you know, deposit or make payments to people. Now, if you then introduce a 15 naira charge on stamp duty, you're increasing the cost burden that these consumers would bear. And therefore, the alternative would be pursued. You know, if there is a way for them to do that transaction in cash and not deposit it through the agent network, then they would opt for that. So I think that, you know, the government agencies and indeed all stakeholders need to collaboratively review, you know, the impact of certain policies on the existing push to achieve, you know, financial inclusion. I think the other thing, you know, in addition to the stamp duty, you know, which I think the government should review, is the issue of dispute resolution policies. Mr. Fasasi mentioned it, but I think that if you look at the current policies on dispute resolution, you would find that a customer is still allowed to come and dispute a transaction within 6 years of performing that transaction. Now, if this transaction happens at an agent location, irrespective of the policy that says you should resolve that transaction within 3 days, right? You find that if it has taken so long for the customer to come and report the transaction, there will be problems of, retrieving the evidence of that transaction, on the agent side. So, and that creates some inconsistency because that delays the resolution process. So I think, a holistic view needs to be taken in ruling out, policies to ensure that every stakeholder in the value chain is protected. Yes, it's good to protect consumers, but if you have a policy to drive agent banking as, a strategic initiative to support financial inclusion efforts of the country, then you must also be protecting the agents in your policy objectives. So some kind of a holistic review would need to be done to ensure that both the consumer and the agent, who is also a customer, are protected in that dispute resolution chain, to ensure that everybody is given an opportunity to be able to work within the timeline set. So really, for me, this session or this forum is absolutely, very helpful. And a number of the issues that have been thrown up, are there for us to be able to chew. And I just want to thank the LBS and all the other participants who have made comments, for their participating in this session.
Thank you very much. We have very little time now, but I can recognize, Jane can very briefly speak. Mukhtar Baba and Aderunke Adeni, if you also will make brief comments, will then be able to close the meeting. Is Jane still willing?
Okay, yes.
Wish to speak?
Yes, Jane is here. Actually, my question is directed at Dr. Paul, if he's still on the session. So I'm just really curious to know why the microfinance banks are limited to geography. My understanding was it was based on their capacity. So if it's not based on capacity, why are they still being limited to geography, given that we're transiting into a digital world?
Okay, I think that Dr. Paul also made some remarks on the chat box. If you look at the chat box, let's see if that answers you. If not, put it back on the chat box and we'll get Dr. Paul to clear it up. Mukhtar Baba and Aderunke Adeni.
Mukhtar is ready.
Yes, Mukhtar, very briefly, yes, please.
Okay, thank you very much and thanks for having me. Just a brief comment and advice to the Central Bank of Nigeria. Yeah, as somebody said, financial inclusion now goes beyond just the private sector. The public sector is also involved. For the first time, a public institution has been appointed as a super agent. I'm referring to NIPOS. But you see, because of this lack of engagement with other government institutions like Minister of Finance and Accountant General's Office, today NIPOS is finding it difficult because of the TSA rules to have account to deposit money banks to operate its network. So I advise that in future, the central bank should take such things into consideration, either to be flexible on its side or to get the Accountant General or the Minister of Finance to be flexible on that, on its side also, on their side also, to allow such a situation to obtain. Definitely you can't do agency banking and other things like remittances with a TSA account. So this is what I want to advise briefly. Thank you.
Thank you very much. That's speaking also to the need for us to have a wider net of stakeholders in this discussion. Yes, Aderunke, please. Yes, that will probably be our last intervenor.
Hello, everyone. If you can hear me, my name is Aderunke. I
You're
work
welcome.
with the Nigerian Communications Commission, the Policy, Competition, and Economic Analysis Department. Okay, so my take is this. I just want to contribute to what Tobe Chiku presented, the issue of eKYC. We've just been experiencing an unprecedented time in our world, in our nations right now. So I think we should look forward as regulators, policymakers, to see how we can leverage on digitization of processes. How do we do onboarding, biometrics, and identification of people digitally? We have a lot of ID capturing data all over the place. How can we synergize? Because this will continue to be a bane. If we have lockdown again of this, issues of hygiene, and people are scared to even, touch multiple surfaces, we need to think outside the box. We need to see how we can all come together. That's just my thoughts. Thank you.
Well, that's it.
Sorry,
Thank you.
organizer, CBN is here if you want me to make a comment or some comments.
Who is, you didn't put up your hand. Who is this, please? So I can, who is?
My name is Aisha Isa Oladipo.
Aisha. Right,
Isa
okay, yes, very quickly.
Okay, thank you. I represent the Director of Payment Systems Department, Management System Department, CBN. And just to take some of, or respond to some of the comments, especially as the borders on the operation currently of microfinance bank. Again, there are restrictions to geographical location. I think we also need to understand the objective of why we had or licensed the microfinance institutions way back. The essence was just also to reduce their cost of operation, which is the reason why we had to stagger them into unit, state, and national. In doing that, we ensure that we manage the risk, and to manage risk, we must keep their cost and exposure very simple. So we acknowledge the fact that now in the digital era and given the digital structure, it's becoming difficult to restrict the operational activity of a unit microfinance, so to say, to a specific geographical location. And so I must say today, the CBN, in conjunction with relevant stakeholders, we're already working on a revised guideline to ensure that we allow them to work without any restriction, but also ensure that we keep them within the acceptable risk profile. So I think that also addressed the issue of CBN should engage more stakeholders in policy formulation. I'm sure people on this platform would attest to that we changed from the former CBN, where we just roll out or dole out policies. We engage specific stakeholders. We also expose to general stakeholders before we present a final copy to the industry. So we welcome any comments, and this is also going to be a take back for the responsible regulatory department, so they can fast track the current activity on the revised guideline. And I'm sure LBS is also a key stakeholder, and we would also call you in when the guideline is at the stage of exposure. So thank you very much.
Hello, Prof, are you there?
I think we lost him a bit. Timothy, you may need to.
Okay. Okay, so take. I don't know if you wanted to do a wrap up, but while we wait for Prof, Ibuku, please can you share the flyer for the regulators course, please, so that I can just quickly take that while we wait for Prof. Okay, so very quickly, I would like to seize this opportunity to introduce our capacity building for regulators. So the course is titled Sustainable Business Models for Financial Inclusion, Regulatory Roles. The course will focus on policy and regulatory approach to promote sustainable business models for financial inclusion. It is a fully sponsored course and will be a 5 weeks online certificate course. Our target participants are regulatory agencies, ministries, and parastatals who have DFS and financial inclusion related functions. So the course is scheduled to commence on the 22nd of June. I'll be reaching out to all agencies, requesting them to send us nominations for the course. So please look out for our emails, our calls, our messages regarding this. Very soon we'll be reaching out to regulators in particular to send us nominations for the course. Thank you very much. I don't know if Prof is back now so that I can quickly do a wrap up. Or Toby, do you want to do that?
Is Prof back? Okay. If he isn't back, we just want to say thank you to everyone who has come for the forum today, and very, very insightful contributions and comments we've made. Hopefully we'll take these comments, findings, and hopefully we'll share the slides with our participants today. And we can take the slides in making these comments, contribution, making decisions, and also even interacting with each other, finding ways how we can build sustainable models, and also come up with regulations, policies that will drive financial inclusion, taking these insights, contributions, comments into consideration when formulating policies. So thank you so much, everyone, for coming, and we appreciate the contribution.
Thank you and bye.
Thank you.
Thank you, everyone. Bye.
Thanks. See you next time.
You too. You too.
Thank you very much.
Thank you. Thank you, Abdulaziz. Thank you so much for being here.
Thank you.
So when
a very good one. I will call Timothy.